There is a lot there, and relevancy and content driving trust. Niall, I know that when you're looking at this from an institutional level, that there are other elements that drive trust, right? And you maybe want to share your thoughts on this topic as well.
Yeah, I think Bryan actually touched on it. Brand is key. So like there is a certain level where, you know, the brand does come first, and who you're dealing with in the digital experience helps and augments that. But who they are and their track record is key, and it's still not getting away from that. I do think there's a blurred line where individuals who are getting a digital experience and they're starting to manage their own wealth themselves, who previously would maybe not considered using wealth managers, then it's actually digital experience, it's access to data, access to transparency, and it's personalized service. And Bryan, you would have touched on that. Like that is key, influencing them. But at the institutional level, very much as trust is built on reputation, but it's also built on your ability to give you the products, to give you the service in a time frame that meets your business needs. And that's the key part. A lot of them are so hindered and so constrained by regulatory compliance and all those pieces you need to get through, that actually the ability to trust that they will get you the product you're after, that they will manage your products the way that you expect them to in a time frame. That's a big problem, because actually a lot of them are let down. A lot of those institutional customers are let down. They don't get the service in the time frame they expect. And some of them are actually opening multiple accounts across multiple providers to see who's going to win the race. They're only going to pick one at the end, but they're going through the process and say who can win the race of giving me the service, of getting me onto your systems in the time frame that actually meets my need, because the opportunity is gone if they don't do it in the right time frame. So trust for them is actually speed, the ability to fulfill your promises, and digital experience is important to that, but digital experience kind of augments that, kind of supplements that.
Niall, I think you're right on the money, because I was reading a study from Cornerstone. A year ago, 4% of millennial or Gen Z actually considered their primary financial institution to be a digital bank. Fast forward to now it's 15%. Millennials a year ago was 4%. Now it's 15% considered digital to be their first, a challenger bank being their primary. Gen X a year ago, 4%. Now it's 11%. In boomers, we're actually seeing a change too. People like me, I'm a younger boomer. It was 1% a year ago considered a digital bank their primary FI. Now it's 3%. I mean, there's a change occurring, and you're right on the money. I think people are dabbling in these experiences to a certain extent, even those that are high net worth, as well as those that don't have a lot of money. And ultimately, they will pick their partner per se.
And I think it's happening naturally, as in, they wouldn't even see it as being wealth management. There's another service, whether it's challenger or not, that has a natural way of managing your money, and it's personalized. And it's like, yeah, I'll put a couple hundred into that. I'll put a couple of. It's just kind of happening organically rather than to engage with a wealth manager. It's just naturally that people are kind of expanding that space at a personal level.
Yeah, that is interesting. This whole, again, moving upstream and moving from individual into mass affluent into institutional, or high net worth, and then into institutional. There's just different tick boxes along the way and how you create trust. And it's interesting, Niall, to hear you say that even at the institutional level, you see institutions opening up different accounts with different providers to see who's going to do the best for them.